Hey guys, welcome back to today's live stream with regards to the red folder. And yeah, let's hope today is actually giving us a good setup. Let's have a look at the chart quickly while we wait for this to happen. Let me just have a look here. You'll see I've basically drawn not a trend trader, but there's a trend line here, which I just want to show to you guys. So obviously there's some big downside here. There's a level here that I think we might go to bounce to go higher. But at this point, we're creating this lower highs into this 4 hour fair value gap. And it's more, I define it or refine it more in the 1 hour. So I don't know if we will have to see now. So far, this trend line is holding. If you go down to I don't know if you want to go to 5 minutes quickly. Let's see. Okay, there comes the news. So let's keep an eye on that quick. Okay, there's some decent movement on this, which is great. We're going to have to mark out these lows and the highs, but let's wait for that to form first. Let's call this target. And then we're going to have to do buy side once that's obviously done. This line ignored, this is just that trend line I mentioned to you guys now. And just so you guys can see, let's go down to a daily and just expand this a little bit more. You'll see I've marked that level out. So obviously there's a bunch of writing there. There's all the sell side down here. There's this equal lows down here. This created equal highs, but we ran that, and I'm expecting something to, if we want to see price going lower, I'm not suggesting that at all. I'm just saying if this fair value gap gets inverted, I would definitely look at this as a next target. If we go through that, we might see, somewhere in this area. But for now, we're up here. I'm not bearish at all. I need to see what transpires from what we obviously created here now. There's at equal highs that we've run the liquidity already, so there's no need for us to go there again. Let's call this buy side. Okay, so that's the buy side. So for now, it would look like that price wants to bounce off this trend line to go lower, or this could now be something where it wants to go higher. But be as it may, the basic strategy to this is that you mark these highs out, and then we want to see a nice reaction or fair value gap runs some highs, which could be just above this high here, and then target the sell side. But I want to show you guys what I will be targeting as well is this equal lows right here. So that would be my target if we get a nice sell up here. But let's see, let's sit on our hands. We don't need to do anything right now. Let's just see what price wants to do, and I'm just going to mute myself for 2 minutes, and then I'll be back, and then we carry on here. Sorry guys, I'm back. Alright, looking at this fair value gap here, I mean this push up here into that equalize or that liquidity on the daily, that's actually a perfect setup. The problem now for me is these little candles trying to invert this thing. I need something that immediately inverts it strongly. Then I know, okay, we're on the right side. The minute you see all these little candles, it sometimes suggests that it wants to go higher again, or move more sideways and eventually come down. So hopefully we'll see now. Maybe let's see how many candles this is. 1, 2, 3, 4, 5, 6. Okay, 6 is still fine. But now let's see. See, it didn't invert it properly, but it might go up and test the 50% and then invert it. But let's see. Let's change this to the right. Okay, see now it's gonna most probably either gonna go higher from here, or it's gonna test that. So we just gotta have to wait here. Sometimes I used to make this mistake in the past where I'll jump in here and then this thing goes higher, and then not a great feeling at all. Okay, so just to recap quickly, so I've made the sell side target on this candle's low, but if you actually look further, there's some nice equal lows here. So if I'm shorting up here somewhere, I'm going to target these equal lows. That gives me a little bit more on top of my risk reward. And if you then look at the why can't I sell, create an order? Okay, let me hold on, give me a second, let me see what's going on here. Okay, logged into my account, seller there. Come on, why does it not take the sell? Okay, so obviously guys, this is not financial advice of any sort. This is just me carrying on with this journaling on this strategy to obviously have a good idea as to why I'm taking these trades. At this point it feels like you've missed the boat and you would try to jump in here, because we break this structure here with this aggressive push down. With this block here, we can see a bounce up to test this and then drop. So I would just patiently wait and see if we're gonna test that. And I mean, if it doesn't, then I guess I really just missed the boat on that. But there's a fair value gap here, so we might go and just take a sell in there. Keep my stop above here and take profit down here still, just in case it only wants to go into the first fair value gap. But let's see how this plays out. Look, if you really look at the range from the bottom of this liquidity to the top, you're still in a very high premium zone to be taking a trade in this first fair value gap and not this IFEG up here. And there shouldn't be anything wrong with that. but let's see, let's make it the orange color because that's the IFEG column. If we close below this white candle's low now like that, I would most probably just short it there, because that's a, you know, that's a very what you call it, you know, continuation down pattern type of thing as well, like that. Okay, so we're in with that first one, and I don't know if this is going to be the test, or just take these little highs out in this fair value gap and then drop further. But my strategy is to take it on the 50%. We didn't get that, and then obviously the bottom of this inverted fair value gap didn't get that, and then this outside bar is something, it's a scalp of what I've used, you know, I use when I scalp, and you know, in this scenario I would take it there. Normally you can put your stop here, but there's a fair value gap and there's equal highs here, so price might go dip into that and then continue lower. Let's bring this down. That little white block could stall price there as a break, order block type of thing to push us lower. And this could be seen as some sort of breakaway gap after the inversion to push price aggressively down. Let's see what it does. I normally break my trades into three. If it's micros, 3 micros, I'll put one up here, one down there, and then see if there's anything in here if I miss this. If it goes up in there, then obviously I get a good price and just leave it. Or if I get a nice setup within the trend down, to take the last 1 micro. I know this is not micros, this is mini, these are minis, but that's normally how I broke, you know, do my trades. I just want to take this out. So you guys what I've meant by this. See our price was holding there to reject from that, but gap over here would have been a nice test in to drop as well. See, I don't know if we're going to go back up there. I'm going to close that for now, because I think this could be the breakaway gap Could see something come back in here, and I'll put my stop above that. And let's see. It'd be nice if this can play out before the 9:30 opening bell, because then you've taken some liquidity there, and then do whatever it needs to be do, whatever it wants to do during that time. And that's normally a good time to know you're done for your the day, and nothing else matters than your profit target gets hit. See if price wants to test this order block up here to give entries all the way down. See this big candle here and this trend line that we looked at earlier. That's where retail's saying we break out, test to go higher. I might be wrong and get tested here to go higher and stop me out, but that's a retail mind. My strategy is to think differently, and hopefully this breaks down all the way down here, and that was just a fake out for retail, and not the exact retail type of thing. I mean, we've got a nice fair value gap here now. Just mark that one out. This one is a blue. That's a fair value gap. So while we wait for the price to hopefully go down all the way to our target, just a quick one on a fair value gap or inverted fair value gap. Obviously, these are the liquidity highs, and this was a perfect aggressive move, creating that fair value gap. Then you need, the least amount of candles to reject and invert quite quickly. So we've got this aggressive move here. I didn't like those. I mean, we're looking at 1, 2, 3, 4, 5, 6. 6 candles maximum is a good type of reversal. If it's 3 or 4, that's even better. The minute it starts coming down, going up and coming down, small candles, that does not, deemed as an A plus to me. That suggests that we might want to, play for time, drag it out, or want to go higher a little bit before it comes down. And that's just something you need to keep in the back of your head if you really want to take top quality trades. Whenever that fair value gap runs a liquidity and it inverts very quickly, that's a good sign that you're on site, provided you know where the opposite liquidity sits. I just want to show you guys out of context here. I mean, we've got context that price wants to go down. This is, on any other day. This is the scalping strategy. Normally look for 221. You would have featured 221 already on this candle. And I mean, if you get an entry like this and you want to extend it out like the way we entered here, I mean, that's going to be something to a 7-to-1 type of trade. Now, I'm not saying this scalping strategy that I'm using for some other entries it's always going to be the 7-to-1. In this case, we've got obvious liquidity sides that we think price will most probably going to go there with IFEG and all of that. This might go into this fair value gap and test this 50% and then go lower, or even spike through in there but close within the fair value gap to use it as like a resistance for price to go lower. I would like to see this black candle close below this white candle's low. That would be a nice setup again, but now you at equilibrium, so you'll be careful to take a trade here because we can see price move up before it goes down. So what price is doing now, closing above that fair value gap, is not ideal, and this is turning this into an IFEG. So you know, this is the second line in defense. If we want to reject to go lower, or this might go all the way into this fair value gap. So that's equilibrium there. They might come in here to sell off again. Just in case we sweep in there to drop. If we close below this 50%, that's a nice swing point almost to test that white candle and then drop further. But within a IFEG is not, I mean, it's not always ideal. But let's see. In an order block, this would be another fair value gap if it inverts. Where an entry can be taken. I'm not taking entries here. I'm already up, you know, in here. So here's a great example of a solid IFEG. It's coming off order block, fair value gap, create a fair value gap 1, 2, 3, 4, inverted aggressively from top to bottom. That could be a nice entry to take it down. And let me show you, sell one, yeah, boom. See if it does it, take it. And then this can, I can leave it up there. If this sell order doesn't get picked up, it's fine, I'll just leave it because I'm already in here. The minute we go lower and break this, I'll go to break even, and I'll just sit and wait, hopefully, to get there first before we do any retracements up here. Actually gonna, I've moved myself to break even now, and if it rallies up now, then obviously I'm fine with it. But I think the fact that we went up into this order block, we've tested this little order block here already with that scalp setup, and this obviously went through this fair value gap. But if we, you know, keep the eye on the price, I mean, this is a nice fair value gap that got inverted. Maybe I must just make it orange as well. And now we've got, yeah, I want to be out. I want this whole scenario to play out before 9:30, to be honest. this is going to be a breakaway gap. I'll just leave that as that. Okay, so I'm going to close this thing because it means nothing right now. And what you guys can see here is this black line here. That was the trend line we spoke about earlier. Let me just make it smaller so you guys can see this big trend line. Breakout traders jump on here, and the minute, and if I talk about breakout, I'm talking about retail. Retail saw this rejection to go long, and now it's gone down, stopping them out, because that's where they would put their stop losses, right? And hopefully we're on side now because we've got this IFEG. We could test it again to drop, or we might test this little imbalance here. I don't know. Let's mark it out. I'm not taking any shorts in here. I'm just highlighting that. Because we took this low out and closed below it aggressively, in my mind, even if we retrace back into this IFEG, that should be an area of resistance to block price to go lower. If we shoot through, take this out, that's also fine, and I'm happy to be out, because then we might go all the way back up here, which I don't think we will go to this breakaway gap up here, the one in blue, because of the price action lower. And yeah, we've already crossed over into a discount zone, and I don't think smart money would want to sell in a discount. They would want to go into a premium area, and when price was in premium, that was the ideal time to take any shorts. So we might see a quick dump down here before 9:30, or it might aggressively spike through at 9:30 and then do whatever it wants to do. good to see, right after the IFEG, we create this volume imbalance, price is holding, price might react like it does now into there, where retail might again think, are we bouncing now because we run that liquidity off a breakout trade, and then hopefully, validate that we're on side, that we see a more aggressive push down to catch everybody off guard again. Okay, let's see what happens here now. Pretty annoying if I get stopped here, especially if price is playing along all the time, and but it's not over yet. As long as price stays within this fair value gap area, there's a little gap, fair value gap up here where price goes in, and hopefully we reject from here to go lower now. Again, not ideal to see this inverted fair value gap get slightly inverted again. But if you really look at, I'm going to just mark this one out to show you. See, price is still within this fair value gap. And maybe let's call it the fair value gap. So that fair value gap here was inverted. It was an inverted fair value gap. You break even when you close above this or take out this low. Would have stopped you at break even if you took this trade. And now there's a new fair value gap up here. And as long as price stays within it, there's no need, to collapse any trades. But we've got a new fair value gap down here, and hopefully we get a nice inversion on this candle here to push it even further. The reason I'm not closing my trade is because I'm not entering down here. I've entered up here. I've moved it to break even. If I get stopped out, then it's fine, then so be it. And then I'll look for a re-entry up here if it gives me the opportunity there, but yeah, let's just hold on and see. Sometimes it does this and then aggressively push lower. All right, so what I've done here is, it's just trading, changing back to see, gosh, if there's any gaps where my entry is, and we're trading down here. So if we want to fill a gap, it's not up here. It's still within this range in order for us to go lower. And you can see there's some equal lows here as well. So in my mind, if my entry was within that gap, I might have, my first reaction would be 930, might run in there, stop me out, or fill the gap, not to stop me out, but to fill the gap and then run down to this liquidity marked out. But because we're not there, I feel somewhat safe. And now that we're using this, this fair value gap up here, let's call it a fair value gap. It is resistance. We close it below the 50%. Hopefully we can continue that momentum down, and we might see the push lower when market opens at 9:30, which is right here, about 3 minutes from now. All right, this could be the fake out, the fake bounce, the secondary fake bounce, and now stop people out again. People might have thought this is where we go in. maybe there's some sort of divergence on a lower time frame or something. And then here we go again. So as you guys can see, we've got this high, then we've got a lower high, and we might create all this lower highs, forming all this liquidity buy side for price to spike up at some point, maybe, I don't know, today or whenever. Okay, that's still fine. Buy side's been taken. Just wanna keep it nice and neat. Right, let's see. One minute away. Hopefully we see that big push down, take liquidity, and we're out of the trade, profit, and then it could do whatever it wants after that. Okay, let's see. Take us down. Okay, we go into this fair value gap over here. As a test, and hopefully that use that trend line to just test it and push price lower. Or it does it in a bloody IFEG to push higher, taking these highs. Come on, you can do it. Push it lower. Push it lower. I think the key thing about this strategy is you just got to stick to the rules, even if it goes and stop you out now. I mean, it's just one of those things, and don't read too much into it. We know where we want price to go to, and we need to stick to that. Sorry about that noise. Dogs in the house. Okay, here we can see some pressure, and again, if you take this swing point here to this is your OTE entry, and come on, almost there. Almost there. It's nice sometimes to see a trade, plays out and does not go 80% where it needs to go to then turn around and stop everybody, even yourselves, out. But you gotta submit to the idea and the rules of this trade setup, and you just gotta sit it out, and if you don't want to watch it, maybe just walk away, come back an hour later and see what happened. I just like to watch it and obviously mark out the stuff that I'm seeing in between, like this fair value gaps, holding price, accumulating, come back, create a new fair value gap, went in, reaction, but now it's still, I don't know what the story is here, but it would be nice to see price go down and sweep those lows, get it over and done with, and not screw around here to run up and then come down. But if it does that, that's why we journal, and that's why we learn from this, and maybe there's something to this that you can do better the next time. It would have been perfect if this inverted fair value gap up here gave us the opportunity to enter. I don't see that there's opportunity. I would have seen this candle breaking, then test, then drop. Then you would have had a nice entry, break even. You don't have to worry. Even if it runs up here, taking these highs, it still gives you, breathing space, room to sit with a trade, to then eventually go down and hit your profit target. But the bottom line is, guys, if you keep doing this and you find these trades and you discipline and you sit through it and you practice this, in the long run, this trade will serve you well, and you don't have to worry, even if you have days where you get stopped out, as long as you're not chasing price. If you can draw a line to say this is premium, this is discount, don't like to sell down here, I like to sell up here. If you want to, I don't know, if you get out of your trade, it's easy for price to spike up and down here as it would from down here all the way up. Can it do it? Of course it can. But will it do it? Looking at what's happened and me expecting this to hold as a breakaway gap type of thing, I wanted to see more aggressive price action. But this is maybe, I don't know, playing for time, and I'll tell you why. This is all, holding price there for time, 50 there. That's when the macros normally run, and it ran till 10 past. So basically, price can do sideways move and stop out top bottom till it gets in here. Then it continue with the actual movement, because this is the macro time. We macro, spool price and run liquidity, and we know liquidity is down here, so the possibility that it will drop from here aggressively is much higher than anywhere else. So in a way, this is normal for price to do this. It's not nice for price to do this. Normally, sometimes you get price, it gives you an entry and then it moves quickly and it gets over and done with in minutes. But then you get days where we go up into an order block, which is great. We go down, we go OTE, we go down, come up again. We can see this OTE again. Then we see aggressive moves. But I would have expected this to happen more in here. The other thing that I also, that's the 30, and that's 45 is around here. So if it creates a fair value gap here, price could use that as, okay, let's do this. I'm going to take this off because I think this could create the 930 fair value gap. and that is a powerful fair value gap, because that can, okay, so we'll just wait. If it's not forming it now, let's just take it out. Then you could see price use it as resistance, drop, come back, invert, support, and go up again. But this move down has filled the gap, so there's no fair value gap there. So we've taken liquidity. It would be nice if this was a fair value gap, but doesn't matter. I'm just gonna, leave this here. Okay, so the one good thing about this IFEG, we've got, into it, spike run liquidity and big reaction. Filled this imbalance, and now hopefully a reaction. And I don't know if we're going to go into this section, if we're going to continue lower. And the reason I say that is we've got this big purple block. This is a 4 hourly and a 1 hourly fair value gap. If we push through that to invert it, then we can see price go lower even further. So let's see, but we only want to target these equal lows here, and leave it like that. So we're in a profit now around the 1,000 mark. I don't want to move my stop to here in case something happens before it drops. But because you've broken all these lows, there's liquidity. Remember I said earlier, lower highs, lower lows, lower highs. It's going to be painful if price turn around here to go higher. 1, 2, 3. I would expect another push lower. Hopefully this up candle with this shift holds price to go lower. The other thing that could happen, this section here where you see the macro, this could also be a setup to when it goes in here to run these highs, boom, 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 into this fair value gap, and then aggressively sell off from there. So let's see. So this is where the fair value gap is. And let's see, 943. I would like to see price to come boom through this. Interesting to see how these candles respecting that 50% level, and you know, it spikes through it, but the body's all closed below it. Let's see something, yeah. Reason I do this, I want to see where's 50%. See this inverted fair value gap? It's at that 50%. So price spikes through it to sell off. Goes up there. It's almost like the sellers are, you know, accumulating there to go down here. And that is an interesting level. See, price went to 50%, above 50% or at 50%, you get a good price. You don't want to sell down here. You don't want to sell down here, even though if it inverts, we would like to see it go down. But see how these candles in this IFEG middle almost lines up, and that's where we spike through to reject, and then come back up, and hopefully we see some rejection down here. Okay, so this turns into a inverted fair value gap now. Test at 50%. Hopefully we'll see price go lower. Yes. Like the reaction so far. Okay, so now I want to see price going into this macro zone to aggressively push lower. Okay, now we're at the sales, just taking that sell side target that we've, the opposite of the CPI candle. But we've got those equal lows even further down. So if you were not, if you wanted to get out now, you could, or taken some partials, or you could have waited and see what happens now in the next 14 seconds, where we could see that spike taking that liquidity, or we take it even before that. And it's aggressive candle through that low on the CPI candle. Or yes, and here we are in the macro time now, and we should see some volume coming in now as well. You are so close. Just do it already. We might, just in that fair value or that inverted fair value gap, that white candle, do some sort of retest and then drop. And I would be surprised if we leave this equal lows untapped now. Can it do it? It can leave it. Yes, it can. But we've moved and we've pushed. And all I want to see is another push to reverse, or if it wants to reverse. But let's see, I can actually, and also because I don't have 3 positions open, normally I would have taken 2 off here and hold 1 to see if we can go lower. But yeah, I think this was a good place to put your stop just above that, if price wants to turn around. We've done the liquidity first target, and let's see if it's going to give us the opportunity to go to that equal lows. Okay, we need to close below this white candle's low. Then it would be, spoke about the scalp earlier. That would have been a scalp entry for me, to put your stop above the candle and mark out 2 to 1. Almost. This is the part where most traders feels like, we're so close to take that liquidity and we're not doing it. Is it a scenario where market's going to turn on a dime and go to the other side again, or will it actually go there for some reason, just holding price? We still got time in this window of the macro. And let's just wait it out. Right, we at that low on that sell side target again. We just need price to push through it now, and not, you know, especially for my trade, for that equalizer. Come on, I know you want to. In this little fair value gap here, hopefully we use that as resistance to push lower. Right, if we close below that candle's low, that white candle, no, it doesn't. But anyway, so it looks like it wants to move lower now, and hopefully it can take our, you know, take that liquidity out now. And as we are where we are right now, the strategy worked 100% today. Again, it went up to the buy side. It took buy side. It created a nice fair value gap, inverted it, rejected, gave you the entry. It took its time, and it went down all the way, and target was hit. It was moving up and about, and eventually we just reach our target on that equal lows that I've highlighted out here, and that gives us a good $1,700, and risk was managed. All of that, we stuck to the plan, and whatever happens now. That is me. That's my trade for the day. I made some money, and there's no need for me to sit around and wait for any other opportunities. This was the opportunity, and I hope you guys find value from this. I'll try to do more of these live streams. Give me some comments and all of that if you would like something else or need something to be explained. But that is it for me today, and I'll speak to you guys soon. Have a great afternoon and be safe.